So if you go to the next slide, we're going to do a little section just on the long-term outlook, because a lot of the stuff is, win, short-term, where's VIP going. But what really matters for this space, and we did a real long-term looking deck presentation last month, what really matters is, where can this market go and what are the major growth drivers. So if you look at the penetration chart here, you can look at the US and Australia. Those are the most penetrated gaming markets in the world. And you can see that 33% of people in the US have gambled in the last year, 29% in Australia, only 2% in China. Okay, so in China, you can argue that they're culturally more prone to go gambling than any other culture in the world. So I think there's a lot of growth here, built-in growth. Macau is really the only gaming market in Greater China. We think we're going to continue. I don't know if we're going to get to 33%, but we are going to see continued growth in that penetration rate. Most of the business right now comes from one province in southern China, Guangdong, which is closest to Macau. So there's a lot of penetration growth in the outer provinces, a lot of potential there. And what's interesting about that is once you may not get a lot of gambling dollars on their first visit, but a lot of them tend to be repeat visitors. So you'll see an exponential effect on growth from increasing the penetration in the outer provinces. Now, if you're focused on GDP, because you say, okay, well, sure, the GDP in China is so much lower, so you may not ever get to that level that you get into the States. Even on a GDP basis, we're only 2.5% penetrated in this. That's a chart on the right here. 2.5% penetrated in China versus 3.5%. So you basically got 3.5% in the U.S. You've basically got a long road just to get to the same gambling dollars as a percent of total GDP in some of the more mature markets. So here are our forecasts on the next slide. You can see we've got potential for a lot of growth here, and this is just slowly increasing penetration, which is going to be helped by a lot of the infrastructure. You have a bridge that's going to take you right from Hong Kong into Macau. The ferry terminals are getting better. The border gates are improved. There's a light rail going on here. All this stuff's going to open up in the next 2 to 3 years. It's going to facilitate more visitation to Macau. So we're very, very bullish on the growth, the long-term growth here. And the good news is it's going to revert from VIP to mass business, which is higher margin. So we're happy about VIP right now as long as it's beating expectations, but you really want to see that mass business grow. And by the way, it is growing. It's growing low double digit right now. So it's a very good growth rate. We expect that growth rate to continue. It's just VIP over time will moderate. So if you're looking at 10%, you just think of the math, 10% mass growth, say, that translates with the flow through 15% EBITDA growth. That's all same store sales. That's not anything to do with additional capital. So as you can see from the next slide, that's going to drive return on invested capital really through the ceiling. And when that happens, obviously you have a ton of cash flow. A lot of that cash flow gets distributed back to shareholders, but that also augurs for a higher valuation multiple when your ROICs are going up like that. So the good news is there's been a huge CapEx cycle in Macau, which will end in 2019. And from there on out, it's just a matter of driving that base mass business through Macau. We think the infrastructure will be in place to do that, generate same-store sales, same-store EBITDA growth, and really high ROICs. So I think this is a great place for long-term investors as well, even though we do like the short-term. You could see us transition at some point when we start to see growth normalize in VIP from maybe a Win to an LVS, which has the greater exposure to the mass business.